So good evening. Today training will be based on, let's look at position sizing. And if time permits us, we can treat stop loss as well. But let us start with position sizing. Let me open my MT4. So hope you can see my screen. Let me open a new chart. So this position sizing will guide us through how we are going to open our trade and guide us through as well how much we are losing per trade and how many pips are we targeting for that particular trade. So it will guide you through not to lose more than the initial amount you want to lose. And it will help you to know how much are you targeting in terms of pip and in terms of profits, and how much are you willing to lose for that particular trade. So it is very essential for you to understand how position sizing works before you even trade at all. Before you enter any position, you must make sure you know how much are you willing to lose and how much profit are you targeting for that particular trade. So this is my MT4, which I believe you are seeing on your screen. So let us make some illustration. A little illustration. Let us assume my indicators. Okay, let me add one indicator. Let me add. So I can use stochastic. Let me use stochastic. Good. So here I'm using stochastic oscillator, and this is indicating that the market is about to reverse up. So now let's assume this is where I set my stop loss in the nearest support here. And I want to enter this particular trade at this point. Market have not yet reached the point I want to enter the trade. And I'm targeting this point here. Yes. Or if you think it is too far, you can move it closer. Let us target this point, these two support, these two resistance, these two strong resistance. So let us target here. Good. So now, I will not just enter this kind of trade straight. I will have to know how much will I be able to lose. If at all the market go against me, how much will I lose? And if the market go in my favor, how much profit will I make from this particular trade? So we need to know how to calculate this. So now, I'll first of all take my tools here. Then from this, my entry point here, I will measure and calculate the pips I want to target. Here we have 433. So the 43 is the pips, and the last 3 is the pipettes. So now we are targeting 43 pip here. 43 pip. So from this point as well, you drag it to where the point you want to set your take profits. So you drag it here like this, and here it is 145 pips. 145 pips. So I'm willing to risk 43 pips to earn 145 pips. I think this is up to 1:3. Yes, it's up to 1:3. So now, but what matters most is where you want to set your stop loss, the amount you want to risk for that particular trade. So I've said it earlier, a profitable trader don't really focus on how much he is losing. No, don't really focus on how much trade is losing, but really focus on how much don't really focus on how much trade is losing, yes, but really focus on how many trade is going, how many trade is going against him. Like this one now, when you have this particular trade and started going against you, maybe you have this kind of trade like this, and we have 3 straight lose. It doesn't matter sometimes. Even 5 straight lose doesn't matter sometimes. So far, if you can take a trade and with just one single trade, you can regain back all your lose. That's what matters most. So sometimes someone can lose up to 5 trades and just win only 2 trades. And at the end of the day, that person might be in profit. So the risk reward ratio matters a lot. So now I've measured I've measured from my entry point to where I want to set my stop loss, and it gives me 45 pips. Then I'll open a new tab. So I go to Forex. So let me share my screen so you can see it. So this is it. You go to forextime.com, trading tools, trading calculator. I will send it to the group now. So you enter this. So this site will help you to calculate how much you are willing to risk for that particular trade. So now we have calculated it, and the amount I want to risk is 45 pips. I'll put my pip amount here. The currency pair I want to trade on, let me check. The currency pair is Euro USD. So Euro USD, you select your Euro USD here. So we have different currency pairs here. So when you see the currency pairs you want to trade on, so you enter Euro USD and change this to USD. Our account currency is USD. So now, with that particular trade I showed you earlier, if I use one lot size to take a trade, I will be risking $450. I'll be risking $450. So if I want to risk maybe like something like $250, I'll have to reduce the risk, the lot size, yes, to something like 0.5. This is 225 USD, and I'm good with this. If I want to risk something like $250, I can set it here to risk 225. Then when I take such a trade with calculation with commission, it will later end up being 250 after I take such a trade. And we don't know how long the trade will be in market. Yes, before it's actually close to profit or loss. So if it stay over to the second day, they will charge you. They will charge this particular trade. Yes, they will charge for swap because you have stayed to the second day. They have to charge for swap, and with the swap, with the commission, it will later be in 250. So like this, I'm okay with this 0.5. I'm targeting 45 I'm risking 45 pips now. So if I use 0.5 and I want to risk 250 US dollar. So let us try this now on our MT4. So back to our MT4, I want to take such a trade. So new trade. So here I'm using 0.5 and my stop loss is here 1.09417 and my take profit is 1.11290. So I come here pending order. Market is below my pending order, so I have to select. I believe the market is going up, so it is buy stop. So 1.09, it's 839. So then I enter this kind of trade. I place a buy stop now. So let us see and let us check. So here now it says it is okay, 42 pip. Yes. And we are going to, if the trade go against us, it is 211. We are going to lose 211. And if the trade go in our favor, end up being in profit, we are going to take a profit of 725. Yes. So that is the advantage of pending order. When you set a pending order and the amount you want to risk is higher or is too far below the amount you want to risk, so you can end up closing such a trade and open another one. So this one is far below what I want to risk. I'm targeting to risk $250 and it says here I'm risking 211. So I can still increase the lot size I want to use. So I'm initially using 0.5. So I can increase it to something like 0.6. So I'll come back. So using the same entry points. So let me enter on that trade. New trade. So let me try 0.6. My stop loss is 1.09417. My take profits 1.11290. So I'm going for buy stop. And my entry point here is 1.09839. So I place a buy. So let me cancel this. Let me cancel the one of 0.5. Yes. So let us see. So this one is, I'll be risking minus 253. Yeah, this one is still accurate. It's still accurate, and I will be taking a profit of 870. So that is how to set your position sizing to know how much you want to risk per trade and how much you want to earn per trade before executing such a trade. And it is very easier for me, if my calculation is wrong, for me to reset it back. So it is very easier when I'm using pending order. But when I'm using market execution, something like this, maybe I just take a trade randomly. Now I just go for buy. I just take a trade randomly. It will be very hard. If my calculation is wrong here, I will have to close the trade, and the trade might actually close in profit or in lose. So now I'm having minus 240 in my account. When I do my calculation and I see that my calculation is very wrong, then I have to cancel it here. And the trade might have gone to profit or might have gone to loss at that time. But when it is pending order, so you have time before the market executes, you have time to go and make correction on the order. So that is all about position sizing. For you to know actual, okay, let us try another currency pair. Let us try one more currency pair. So now, so I want to set my stop loss above, my take profit here, and I want my entry point to be here. So let me use my PIP calculator here to calculate. So this gives me 57.5. So we have 55 here, yeah, 55. And this one give me 110. I hope you are seeing it. So it is more than 110. Good. It is up to 1:2. So now I want to execute such a trade. So I'll go back to I want to trade on USD JPY. So I'll go back to, so we have 55 pip. My currency pair is USD JPY. So this one is give me 250. Yeah. If I change it to 0.5, it will be 200. So 250. Good. So I can use 0.5. Let us use 0.5. So .5. Sometimes the calculation might not be accurate, but it will either increase a little bit or below what actually the amount you want. So sometimes it is not actual. It will not give you the actual amount you are going to lose or you are going to earn, but something close to it. So now our stop loss is 123.167. Take profit is 121.295. So I believe the market will keep on going down. So I'm going to select sell stop. And my entry point here is 122.603. So I'm going to execute this market. So let me check. So when you just place your cursor here, it's going to tell you amount you are risking for that trade. So this one says you are going to risk minus 229. Minus 229. So something close to 250 USD. When the commission is being removed, when the commission is removed, so it will be something closer to $250. So we can still manage that, and we want to risk 229 to earn. Just place your cursor at this point. So 532. to earn 532. Good. So this is 1:2 risk reward ratio. So that is how to know the amount of people you want to risk and the amount of people you want to earn, and the amount of money you want to risk, the amount you want to earn as well. So I believe you understand that. So let us move to, let me know if you understand the position sizing. If you have any question on position sizing, let me know before we move to stop loss. So let me know in the charts, if you understand the position sizing. Let me know. Good. So let us quickly check stop loss. So we have 4 types of stop loss. As you know, in Forex market, it is very compulsory for every trader to know how to use stop loss. This will save you from losing day, because in Forex, you have a winning day, you have a losing day. So it will actually save you from losing day. So it is a must for you to know how to use stop loss. So we have different types of stop loss. We have 4 different types of stop loss. So we'll be taking it one after the other. So number 1, we have position stop loss. Let me close this trade. So we have position stop loss. What do you mean by position stop loss? It's just a stop loss. Yeah, we have position stop loss. This is a type of stop loss that will tell you, like the one we just did now, you'll be targeting the amount of percentage. It is called percentage stop loss. I think it should be percentage. Percentage stop loss. So this is the amount of stop loss that will tell you the actual amount of percentage you want to risk on that particular trade. Like the one we just did now. Like, okay, I'm trading now. Currently now I'm trading on 100,000 accounts. If you are using 50,000 to trade, you know, if you are using 50,000 to trade, 1% of 50,000 US dollar accounts, 1% is 500. Yes, 1% is 500. So when you want to risk, if you are earning, if you are targeting 1% per trade, you should be able to risk $250 per trade as well. So that is 0.5 of that particular trade. So if you are targeting to earn 1%, you have it in mind to risk at least 0.5 of that particular account. So now, this is my account. I'm using $100 to trade on these demo accounts. So on $100 accounts, 1% of $100 accounts will be 1,000. 1,000 USD is 1%. And 0.5% will be around 500 USD. Yes. And 0.25 will be 250 USD. Depends on the amount you want to risk. So this is called percentage stop loss. So you calculate how much percentage do you want to risk on that particular trade, on that particular account. So how much you want to risk on that particular account? So something like this, the one we just did now. When you calculate, I'm targeting 1:2 risk reward ratio, and I'll just calculate how many pips How many pips will I, how many pips? So here is 55. So here is 119. So it is up to 1 to 1 ratio 2. It is up to 1 ratio 2 here. So when I go back to my Forex, my FXTM, when I go back to my FXTM and I calculate it, and I go back to my FXTM and I calculate how much will I be making. So my FXTM will give me the actual amount here that I will be risking. So on that particular account, if I'm risking $250, that means I'm risking 0.25 of my account when my account is $100,000. So, but when I'm risking $500, this means I'm risking 0.5 of my account. When I'm risking $1.5, 1.5, when I'm using 1.5 lots, this means I'm risking up to 0.75 of my accounts. So when I'm risking 2 lots, this means I'm risking, when I'm using 1 lot size, this means I'm risking up to 1% of my accounts. So this will determine the place, the exact position we are going to set our stop loss. So this calculation will determine exact point we are going to set our stop loss. And sometimes when you want to set your stop loss in the nearest support and resistance, so it is either you reduce your lot size. When you reduce your lot size, you can be able to shift your stop loss far beyond or above your entry point. When you are using small lot size, so you'll be able to shift back your stop loss very wide. So that is all about percentage stop loss. Yes. So the second stop loss is time stop loss. So this kind of stop loss will tell us exact time you are closing trade. You are closing such a trade. It's going to tell you the exact time you are going to close the trade. For instance, let me open a new position now. So I just decide to open this position randomly now. And when I set my stop loss here, when I set my stop loss and I'm targeting that position and I set my stop loss here and my entry point is here. So this kind of trade tells us that either the market hits this stop loss or not, I'm going to close this particular trade at exact so point. Let's say tomorrow, either it hits my stop loss or it doesn't hit my stop loss. I'm going to close this trade by 6 p.m. tomorrow. So that is time stop loss. You are going to set a particular time where you are going to close this particular trade. So that is all about time stop loss. Either it hits the position or it doesn't hit the position. At exact point, I'm going to close the trade. So you are going to close that particular position manually. So the third stop loss is support and resistance stop loss. Support and resistance stop loss. So what do you mean by support and resistance stop loss? So it is by using the nearest or the strong support and resistance. Something like this. Something like this. Here is a resistance. Here is a resistance. We have here is a support. Here is a support. Here is a support. This is a resistance. The resistance later be a support at this point. So now I want to trade with this I want to trade like this. When I see this particular trade and I want to use the nearest support or the strong support and resistance to enter such a trade, and I want to go for sell. So when I want to go for sell, you know, the market, I believe the market will keep on coming down this way like this. We keep on coming down. And I want to set my entry point here. So using support and resistance stop loss will tell me that I have to find a strong support to use as my stop loss. So, but here I find a support here as well. I find a support here. I also find a support here. I find a support here. I find a support here. So with this support now, you tell me with this, with this resistance, sorry, I have a resistance here, I have a resistance here, I have a resistance here. With this resistance, I have confirmed that markets with using other indicators, I should be able to tell if the market is coming to my direction. So using this kind of stop loss, you have to find a strong support or a strong resistance to use as a point to set your stop loss. So that is how support and resistance stop loss is all about. So when you want to set this kind of stop loss, you just place your stop loss below this particular market here. Exactly. So you set it above. You set it above this particular market. And if I'm using here as my support, as my stop loss, I have to take it a little below my support here. So when you want to set a stop loss, your stop loss should not always touch the nearest support or resistance. So it should be something below the resistance or above the support, below the support or above the resistance. So using the strong support and resistance level to identify our stop loss. And the last stop loss we'll be talking about is called stop loss and high volatility. So using high volatility to identify a position where we can set our stop loss using high volatility. So how can we use that? We've done a training that will explain how these indicators works. So to identify volatility, so you can use Bollinger Bands. Yeah, so we can use Bollinger Band. Bollinger Band will tell us if you have volatility in the market or not. So let us just try volatility. Let us try Bollinger Band. Let us try Bollinger Band. So you can see the Bollinger Bands. Good. So using Bollinger Band to identify a position where we can set our stop loss. So you are just going to set your stop loss below or above the band. Below or above the band. So like something like this. Let me back test very well. So something like this. Let's assume I'm using Bollinger Bands to identify a spot where I can set my stop loss. Oh, it reverse. So let us start from here. Good. So I'm going to set my stop loss. When the market reach here, it's here. And using my other indicators, I believe the market will reverse back up. So when I want to set my stop loss, I will just set my stop loss below this particular band, this lower band here. I'm going to set my stop loss there. So here, maybe my analysis tell me that when the market reach here, it will start reversing. So I'm going to set my stop loss above the band. Above the band. So I hope you understand how these Bollinger Bands work. So when the space between them comes together, when there is no more space between them, that means there is no volatility in the market. But when the space starts expanding, then that means volatility have come into market, and from there we start having a trend. Can you see from here, the market comes together here, but can you see here, this gives the middle band a space, a little bit space, comes like this before going up. From here, you can see we start having trend, which means there is volatility in the market. So when you want to use Bollinger Band to set your stop loss, you are just going to place it above the band. So that is using volatility. And you can also use any indicators that can measure volatility to set your stop loss. Apart from Bollinger Band, you can as well use ATR as well. You can as well use ATR to measure volatility. So and much more indicators like that. We have many of them that you can use to measure volatility. So that is how to set our stop loss. That's how to set our stop loss. Let me recap. We've done position sizing, where you will know a position or the amount you want to lose or you want to earn per trade, and the amount of pip you want to target, and the amount of pip as well you want to risk for each trade. So we study about, we've treated stop loss as well, which I say we have 4 different types of stop loss. We have percentage stop loss, we have time stop, we have using support and resistance, and we use high volatility to identify stop loss, volatility indicators to identify stop loss. So that is all we are going to do for today. So let me know if you have questions based on what we've explained so far, based on the position sizing or the stop loss itself. So let me know if you have any question on that before I stop the recording. So if you don't have any question, good. I think that will be the end for our today's training. So tomorrow we'll look at other things. So last week I told you that we might be opening a trade this week. And sure, let's see how our tomorrow training will be. We might actually start opening trade very soon. So and you can be able to practice all what we have been studying all these days. So I will stop the recording now.